Hey, Jay, welcome to the Simplifying Entrepreneurship Podcast.
Thanks for having me.
Yeah, it's a pleasure. And I mean, we haven't had a chance to meet before about 5 minutes ago before we hopped on this call, but I've been looking at your stuff here today and download your growth spreadsheet and, really interested to learn more about what it is you do and all of the stuff around your business. And, our topic today here around why companies and products fail. It's one of those things every entrepreneur, as entrepreneurs, we always have certain things that fail and certain things that go. So I'm really interested to get into that topic with you. And why do companies fail and products fail?
Yeah, that's great. It's a great question. And as one of my favorite business school professors said, all companies fail for the exact same reason. They run out of cash.
Yeah,
It's pretty
cash flow.
straightforward.
I get it.
But the question is, why do they run out of cash? And if you're an entrepreneur, you're likely burning cash ahead of having profitability
Yeah,
because you go into a dip to build your products and your services. And then the idea is that you start shipping them and people pay you for them and you make money. And if you don't, you go out of business. So the real reason that companies fail, the reason they run out of cash, is because they're not building something that customers want and that customers are willing to pay for. And that is the crux of the problem. That is the question: is figuring out what do your customers really want, and how do you go about doing this? And I've seen this, in the past 30 years of my career. I started working in the finance industry in the early 90s. And then I went and was a product manager at Microsoft. I went back to business school. I ran a couple Silicon Valley, Sand Hill Road backed companies. And throughout those 30 years, where really the first 20 years of my career, what I realized is no one had a systematic way to understand what customers wanted.
exactly.
No one had a way of saying, wait, why are people going to shift from their record collections to their CD collections to iPods and then to the streaming service? I'm old enough. I've literally rebought my entire music collection probably 4 or 5 times.
Tell me about it. Yeah.
Yeah, it seems insane. So why did we do that? And, why did we switch off of BlackBerries and keyboard devices to iPhones and Androids? What are the underlying causes that causes customers to switch to new products? And that really is, if you don't understand that and you don't have a very good systematic way to understand what customers want and what they're willing to pay for, you're likely going to fail. And most startups, most entrepreneurs fail. We always like
For
the
sure.
success stories
Statistically.
because we talk about all the success stories, but really it's an incredibly low success business. So that's really what we're trying to do, is help companies and entrepreneurs fail and do it with less risk, help them avoid failure and help them avoid failure with less risk. So before you invest all that capital in developing your product, figure out what it is that your customers want.
Yeah.
And that's really the key that keeps companies from failing.
I couldn't agree more. I mean, so much of what I teach with my clients and all that stuff is around this idea that you're selling the end result, right? You're selling the end result. You're not selling the features. You're selling the benefits. And I know that's sort of in line with basically the spreadsheet that I just downloaded. That we'll put a link into that in the show notes as well. So if anybody wants to download that,
but technically it's a cheat sheet.
Cheat sheet, yeah, right.
I don't want anybody to get scared away from the fact that it's a spreadsheet.
Oh yeah,
but
my mistake. Cheat sheet, yeah.
Yeah, no worries. It's a document that explains the method, basically.
Yeah, and I think it's great. Really lays it out quite nicely, and I think anybody could take a lot of benefit from this, just to look over it and get their mindset around how that can be and how they should be laying some stuff out and thinking about things. What sort of on lines of that kind of thing, tell me a little bit more about that and how you align that with your business, a little bit more about your business and how you can take care of some of those problems and how you help people through those problems that they're having with regards to doing things the old way compared to your way, the jobs to be done way.
Yeah, that's great. And the method we use is called jobs to be done or jobs theory. There's a lot of different ways to say the same thing, but the basic idea behind it, as Clay Christensen, the famous Harvard Business School professor, put it very succinctly. He said, customers are not buying products. What they're doing is hiring products to get a job done. And that's a very, very simple, straightforward concept, almost deceptively so. But the key idea there is your customer has a goal they're trying to achieve. That is the end
Yeah,
result they're looking for. So, and you can see examples of this in consumer business and medical markets. So, for
for sure.
example, we all hire Apple and Google Maps. The underlying job, the goal we're trying to achieve is to get to a destination on time.
Yeah.
We all hired record collections and then CDs and iPods and now streaming services to create a mood with music.
Yeah.
And if you're a parent, if you've been there, one of the jobs you need is to get a baby to sleep through the night. That's a job. And then in businesses have tons of jobs. They need to optimize cash flow, acquire customers, satisfy
Hmm.
customer needs, et cetera.
Yeah.
And medical markets are the same way. Obviously, every medical market exists to optimize your health. But are you trying to optimize your health with COPD or cancer? Or are you trying to restore artery blood flow after a heart attack? So all of these things that are now known as jobs to be done, the key is that they're independent of any solutions. They don't have any solution statements. And the reason that's so powerful is they're going to remain stable over time. The job of creating a music 100 years ago is the exact same as it is today. It's the exact same as it's going to be 100 years from now. That's true of getting to a destination on time and really
Yeah.
any job that defines the market. And what's interesting is if you look at any goal that a customer is trying to achieve, any job they're trying to get done, it is very, very complicated. You can break it down into a series of generally about 15 to 20 steps and about 100 different customer needs that all relate to getting the job done. So a good example is getting to a destination on time. We all know it because we use Apple and Google Maps.
Sure.
That job has 15 steps or so and about 100 different needs. So it seems like a relatively straightforward thing. I need to,
Yeah.
get in my car and go from point A to point B. But if you really break it down into all of the different variables that are required, from estimating the departure time, planning the stops, optimizing the sequence of stops, finding parking, all that, if you put all that together, it's a very, very complicated job. And if people want to see an example of this, our cheat sheet and our ebook have all sorts of examples to explain this in consumer and business and medical markets.
Awesome. Yeah. I mean, even we own some shoe stores as well, and from that perspective, we always say that we're delivering comfort as opposed to the shoe, right? We want them to have that ooh and ah feeling of saying, like, when they put the shoe on, it's like, those feel awesome, and ooh, those look great. And if we can deliver those feelings, no matter what the shoe is, then we've delivered that sort of feeling, that sort of end result that we're trying to get with every time we sell a pair of shoes, right? Same sort of thing.
Yeah, that's right. That's right. So shoes are a great example. So you can use that to analyze, jobs to be done. People hire shoes for an enormous number
Oh my
of
gosh, yeah.
of different jobs. So if you're a runner, clearly
Hmm.
not only is comfort, but you want to avoid injury. I happen to have just torn ligaments in my ankle, and so I bought a pair of crazy hiking high tops because I'm trying to get the extra support because I don't want my
Yeah.
ankle to re-injure itself. If you're at a stand-up desk all day or if you're at a construction site, I mean, all of these are very, very functional.
Hmm.
So, and we distinguish between the functional jobs and the emotional jobs, but you're absolutely right. The feeling and those emotional jobs can be just as important. So you
Yeah.
want to feel a certain way about yourself when you're buying and using a product, and
Yeah.
you want to be perceived by others in a certain way.
Exactly.
So good examples of this are even getting to a destination on time. If you're trying to get to a destination on time, one of the emotional feelings you want is being perceived as professional. So if
Right.
you show up and you're like, "Oh, sorry, I'm late to this meeting. There was a ton of traffic."
Yeah.
People are gonna look at you like, "Well, they just didn't, plan their day well," and that's kind of
Exactly.
obnoxious and unprofessional because there's always traffic. So, so those emotional jobs are incredibly important, and we break those down into functional jobs and emotional jobs, and then another category we called consumption jobs.
Cool. Cool. I think that's awesome. When you look at all of this stuff, one of the other things that we wanted to talk a little bit about today, Jay, was the idea of what creates customer demand and what's creating these things along the way, what's creating these jobs.
Yep. Yeah, that's great. So, um, the first starting point is defining who is your customer. And
Right.
we work with a lot of companies and even big companies. We work with entrepreneurs and startups all the way to Fortune 50 companies. And you might not be surprised, but it is surprising that a lot of times teams can't even correctly define who their customer is.
Yeah,
So
I
the
know. It's
starting point
crazy.
is and it's always a person. Even if you're in a B2B market, you're
For sure.
targeting, the VP of finance or the VP of HR or some human being that's got some responsibility to achieve
Yeah.
some goal. And we break the customers down into job beneficiaries who ultimately benefit from getting the job done, job executors who might help the beneficiary get the job done, and purchasers who can influence the purchase decision. So that's the starting point.
Yeah.
So, and all markets start with the job beneficiary. And I'll give you an example. Businesses used to hire on-premise ERP systems to help acquire customers. And the job beneficiary is obviously the VP of sales or a sales director or sales manager, whoever. And the job executor in that case was an IT manager, because in order to use the ERP system or the CRM system to acquire customers, you had to set it up on premise and install servers, install software, and it could take years and it could take millions of dollars to install these big systems. Well, IT managers went away, right? Because once Salesforce and SaaS applications came about, you didn't need an IT manager. You just log in. And that's because the markets always evolve towards the job beneficiary, because no one wants this extra person along the way. This is even happening in medical markets. We worked with a company who, it's a fascinating product. The company's called 7 Sense, and they build a device that allows you to draw your own blood. Now, I'm sure everybody listening has had their blood drawn, and it's no fun. And the job executor in that case is the phlebotomist, who's a professional who's trained to do this, knows, the medical procedures, the risk, the precautions, all that. And now you can do it yourself painlessly with this little device. So
amazing.
Even markets as complicated as that move towards the job beneficiary. So what creates the demand is someone who benefits from the job, either a consumer or a business person or a medical professional. And then the reason they're willing to switch is they basically struggle to get the job done. That is what creates demand for new products and services. If people are so frustrated with whether it's getting to a destination on time or, restoring artery blood flow or getting a baby to sleep through the night, and the solutions today aren't helping them do it as fast and accurately as possible. And that's the key, is that their speed and accuracy are the key metrics.
Love that. Yeah.
If it's too slow, it's too inaccurate, it's too expensive, it's too time consuming, it's too costly, that's when you look for new solutions. So I'll give you a concrete example of what not to do. So Apple had sold 200 million iPods at $150 a piece. So that's a $30 billion market. Yeah. So Microsoft looked at that and said, well, okay, there's clearly demand for iPods. There's a market for iPods. And this is very, very traditional. If you look at marketing textbooks, they'll tell you the size of the market is the price of the product times the number of buyers. Yeah. So that's a $30 billion market. And Microsoft said, hey, let's take some of that because there's clearly demand for iPods. We'll make an iPod competitor called the Zune. And Pete, I don't know if you owned a Zune or any of your listeners did, but it was an unbelievably huge failure. I mean, Microsoft lost $300 million in one quarter. So they probably lost about $1 billion trying to take share of this supposed iPod market. Well, there's no demand for iPods. That's the key insight. There is demand to create a mood with music. And why did we switch to Pandora and Spotify, streaming services, essentially? And remember, right when the Zune launched, Pandora was signing up 90,000 new users a day. So what could Microsoft have done to see that market differently? Well, they could have looked into the demand by saying, where are customers struggling in the job of creating a mood with music? And one of the needs in that job is to find a new song for the mood. So if you measured the speed and accuracy of finding a new song for a mood with iPod, how would you do it? Well, you got to go to iTunes, you got to look around, and famously iTunes algorithms were not great. You like the Rolling Stones, you might like the Beatles. It wasn't that in depth, right?
Yeah.
So then you got to find the song, you got to listen to it, you got to preview it, you got to decide to purchase it. Then you got to hook up your iPod to your iTunes, you got to download it to your iTunes, you got to put it in a playlist. So literally you're talking, minutes, potentially some hours just to find a new song for the mood. Yeah. So Pandora famously had these incredible algorithms that, if you liked this combination of music or if you entered this song, it would generate an automatic playlist. And so what did you have to do to find a new song for the mood? You just push play and it was doing it for you. And we all switched to these streaming services because it's faster and more accurate. That is the explanation of the success of every innovation in the world that I can think of. open to counter examples, but really haven't found one that got some job done slower and less accurately and became very
Yeah.
successful. So that idea of speed and accuracy, that is
Yeah.
what you should be measuring as an entrepreneur. Like, what
Yeah. I
is the
love that.
baseline today to get the job done? And then how can we do a much, much better job in the future?
I love that. And I mean, I think that's a great spot to cap our conversation here today. We have fairly short podcasts here, Jay, but I love the conversation today. And what you do is all around this and all around bringing that to the table for entrepreneurs, right? And I want everybody to know how they can get a hold of you, how they can download this particular sheet, the cheat sheet, so that they can get a little bit more information about you and go from there. So why don't you tell them?
Yeah, sure. You can reach us at thrv.com. That's thrive without the vowels, thrv.com. And we have the cheat sheet. We also have an entire free course on this. So you can
Awesome.
log in and try our software for free. And it comes with a course that goes through every element of this, from defining your customer, the market, competitors, identifying customer needs, segmentation, sizing, pricing, road mapping, the whole shebang. So if you're interested, you can take the course for free. It's all online, and hopefully it's helped some entrepreneurs out there.
Yeah, I love that. I love that. And it's been a great conversation today. I really appreciate you joining me here today on the Simplifying Entrepreneurship Podcast, Jay.
Thanks, Pete. Thanks for having me.
Make it a great day.